Hey, welcome back to the Deeper Dive. It's your host Luke, and today I am excited to share some stuff that I found with you guys about tokenization of assets and how it could potentially link to Velo, as well as some interesting connections that I found along the way. So, getting into today's video, I have these investors and strategic partners up on the screen for you guys, because I will be touching back on these. But for now, let's talk about tokenization of assets. And this is from Velo's website, although we can see that crypto-backed stablecoins have crypto assets as collateral, which I'm explaining this for those who don't yet understand this. The stablecoins built on Velo's system are backed with a smart contract that keeps the tokens one-to-one with the value of $1 or whatever type of stablecoin you may have. So if Velo is worth 50 cents, then it would require 2 Velo tokens as collateral per 1 USD that is tokenized. Now, not only does that increase our use cases, but we have these commodity-backed stablecoins that are pegged to the price of gold and silver. And we know that Velo is working on the Laos Bullion Bank tokenizing gold for Laos. And I think that there is a big market for them to potentially take over in this area, since not only will you need the Velo tokens for your collateral for your stablecoins, but let's say a bank sold you tokenized gold like the Laos Bullion Bank. Although the way that you bought this was by exchanging fiat for Velo tokens and then giving the Velo tokens for the one-to-one gold-backed commodity. The issue that lies here is if you sold this digital commodity that is backed by real gold, you would need to have tokens on demand ready to be sent to a wallet. So they're going to need some significant reserves to be able to have this gold and silver just chilling in their bank, because yes, you could withdraw the gold, but the interoperability comes in here that you should be able to get Velo tokens. So I think that's significant to understand. And if we go on here to the gold white paper, this is not the white paper itself, but the site, we can see how token holders can exchange their digital tokens for physical gold bars, like what I was saying. And so I would expect the same vice versa. So that's going to require a lot of reserves sitting in banks ready to be sent out, or at least a lot of reserves within Lightnet that banks have direct access in terms of liquidity to. So that is worth understanding, and I recommend looking into this more on your own. Although I would also like to highlight this here from K Thingle on X. And this is about those tokens, kind of like how I was saying. The Velo tokens utility lies in its double feature as both collateral and as entrance requirement to the Velo ecosystem. Each use of the Velo ecosystem starts with the deposit of fiat and the issuance of a matching amount of digital credits by engaging the Velo protocol, which requires Velo tokens. So you guys can understand how there will be a large demand, like how they say, for the Velo tokens in the open market, because trusted partners will need to purchase or borrow the tokens to receive digital credits to meet their operational demands. So that is worth understanding, and this post has way too little attention. I swear I liked this before, but we can move on here. Now, looking at the Laotian times, we can see that next month the bank is anticipated as a phase 1 to be open, and in late November of this year to operate in full service. So that is exciting for Velo, and we get to find out what that means for our token. Now, moving on here, I would like to talk about one of our strategic partners here, which is Saba, or now known as Amina Bank. And Amina Bank posted this 3 days ago about sort of their milestones So there's a few I would like to highlight. In 2019, Saba received its banking and securities license from the Swiss Financial Market Supervisory Authority, FINMA, transferring into Saba Bank AG. This made us one of the first financial institutions globally to offer a seamless, secure, and fully regulated environment for digital assets. So that is pretty big. I would also like to highlight how they have 2025. Stay tuned for exciting developments. And if you guys didn't know, Amina Bank has tokenized gold using Ethereum and tokenization on the Ethereum network, although I would not be surprised to see them plug into their partner Velo and do some tokenization over there as well, as we do know Velo is capable of plugging into these other platforms like Ethereum. So what I wanted to show is that I looked up the Swiss Financial Market Supervisory Authority. So upon looking that up, I found Swiss Fintech Innovations, which had a paper on their vision of their tokenized finance, and I did look into that. Although first I would like to highlight this Swiss finance startups collaboration partner before we look at this vision of tokenized finance. And there is a few pages I would like to show you guys that sort of give us some hints, and you guys can let me know what you think. So far, drop a like and subscribe for this content because I was busting my butt trying to get around finding this information for you guys. So stay tuned. Now let's continue. Now I would like to highlight this on custody and safekeeping about the parties involved in custody. And we can see that we don't only have financial institutions, insurance providers, exchanges, but we also have individuals, which I think is what we are seeing with the launch of Orbit, where individual holders of digital assets may choose to either hold their funds on their own private wallets or safekeep these with a third-party provider such as a crypto bank. I thought that was sort of telling as to why we see this push for the Orbit launch, as well as why it will be so important to the ecosystem. So on page 36 here, we can see some challenges facing custody today. Now I'd like to point out this part here where they say they can either use a bank or cryptocurrency exchange to deposit their cryptocurrency and relinquish ownership of the private key, or they can maintain their own hard or soft wallet, which requires a certain level of technical affinity and knowledge. They're talking about how there can be some human error when it comes to handling these assets, which I think is also another telltale to why they're trying to push Orbit as a introduction to people, especially if this tie-back giveaway does work with them, then it will be like a lead into how credit cards worked, for example, and it was something that still people nowadays don't completely understand or understanding credit, but there's always lines that have to be crossed to be able to get past these issues. On page 44 here, I wanted to highlight how they've talked about programmable money, much like how Mr. Tridbuddy did in a previous video. Check them out if you have not. I believe that was in my first video. But they say not all of today's cryptocurrencies will be used in the future, as many of the hundreds of digital assets in circulation still need to tighten their compliance measures and or do not have the technological capabilities to develop complex use cases and scale for global use. So I thought that was interesting. They also said, nevertheless, we don't expect any cryptocurrency to be widely used as means of payment and replace any money in national currency. And they think that stable coins will actually have some role. And I think it would make most sense if a stablecoin backed by digital credits, like how we have with Velo, would be used so that it is backed by something. Now, down here on page 50, I don't know how many cryptocurrencies can actually do this, but they talked about collateralization and how one common feature of crypto lending is collateralization, where borrowers are required to deposit a certain amount of cryptocurrency as collateral to secure the loan. Now, this is very similar to what we have with Velo, and they also talk about tokenized bonds over here and some stuff with custody that was pretty interesting, as well as tokenized debt. Now, this paper itself gave me some thoughts that sort of made me think that Velo could have been in the talks here. And if I actually scroll down all the way, what I would like to highlight is these authors. And I did look through every single author's LinkedIn. Although, like I said, this Swiss Fintech Innovations is under Swiss Fintech Startups. And these are some of the people who were pioneers in this industry and helped form this startup. Now, looking into some of the people from this list, we have one of them who is with AXA, and I will show you him right here, which is Francesco de Calibis, and we can see he worked at IBM during a specific time of 8 years, and in 2006 to 2013 he was there. Now, I just found this interesting, partly because Tom Sudchai, Lightnet co-founders, also was at IBM during the same time, so I thought that was worth noting. I also found Thomas Brandl, which is one of the founders, who happened to also work at IBM during that specific time when Tom Sudchai was there. Now, these are not specific connections, although you just never know when it comes to this type of stuff who might know who and how big someone's connections may go. I also noticed this fellow here, who is one of the founders as well, happened to work as a strategy consultant at Accenture during this same time when Tom Sudchai was a consultant at Accenture as well. So we can see 1998 to 2003 and 2000 to 2001. So I thought that these were all worth noting, and I did show this on my Twitter just a little while back, about a week, so make sure you follow me there if you're not already. Now, on the topic of tokenization and what Velo is working on, I figured I would look into some earlier projects with the Bank of International Settlements, and one of their most recent ones was Project Nexus from July 1st of this year. And we can see in their report here, if we go down, we have the Bank of Thailand, which we know sandboxed Velo Labs in moving stablecoins, so I thought that was interesting. And there was a few pages that I wanted to show you guys. So on page 21 here, we can see that cross-border payments through Nexus can be sent by individuals or businesses that currently use IPS to send domestic payments. And this means that Nexus supports person-to-person and business-to-business. So that sounds very familiar to us Velo holders. Just down here as well, we can see them talking about sending money through Nexus and how you would choose a country and you can choose the amount that you would like to send and what token, as well as, well, what currency. But if we go down just a little bit more, we can see that one way that you could do it is through your mobile phone number, national ID, your company name, virtual payment address, or your account number. So I thought this was interesting because we know Prompt Pay is already set up working through phone numbers, and Prompt Pay is used in Thailand. So I just thought that was worth noting. Now here on page 50, expanding the scheme, the Nexus project team started with the initial scenario in which Nexus launches with low or medium value person-to-person and business-to-business payments within the ASEAN 5 countries. However, the ambition is for Nexus to expand, connecting to IPS in other regions and globally. And the Nexus scheme and technology have been designed to support future connection to a wide range of IPS. The inclusion of additional countries and new use cases will increase the benefits for all existing participants and reduce the payback period for any initial investments. So I thought this was interesting that they said it will increase the benefits of existing, and I wonder how that is. Is that potentially through the growth of the network? I guess we'll see. And down here on page 68, I saw that the proof of concept connected the Eurosystem, Singapore, and Malaysia. And then getting into Singapore's fast and secure transfers, FAST, I started to look into them. Now, what did I find? UOB uses FAST, and you can use FAST on UOB is what I mean. So that was interesting to find out, especially since UOB is an investor in Velo. So that is pretty cool to know. They have plenty of ties behind all of this, so I don't see why these banks that are invested in Velo wouldn't be pushing for Velo to be used in some sort of way through a lot of these systems. And if we actually look at the whole list of participating financial institutions of FAST, we can see that we don't only have UOB, but they are at the end. We also have MUFG, which we know I tied to Velo in this video right here, number 5. So check that out if you didn't already. And we also have JP Morgan Chase Bank, which I also found this Lightnet JP Morgan partnership. Post is only from 3 months ago, and I did find this shortly after it came out. It was on Twitter. I posted it. And so we have multiple ties to multiple of the FAST members here. And I thought that that was pretty profound to see. Now, I want to know what you guys think. Could this system be potentially running off of Velo somehow? Could this paper have potential links to Velo? I think it's possible. And how will the tokenization go with these assets, as well as will they choose a system that does not have collateralization? I think it's unlikely. So let me know what you guys think if you enjoyed the video. I think there's some deep ties here, and I hope you guys enjoyed. Let me know. I'll talk to you guys later. Bye.